Now let's get some more thoughts and analysis on all these issues swirling around the markets, particularly out of Europe. George Lucas from Instreet joins me in studio. George, great to have you on board.
Thanks, James.
Look, it's all about Europe, and it's all about the market trying to make sense of what is happening in Europe at the moment. I mean, what have you made of it all?
Well, we're actually expecting the same type of reaction what we got from all the other announcements when they've kicked the can down the road, which has been initially a positive reaction by the markets. The markets rally on the back of the news. As you said, over the weekend there's more analysis. There'll be more analysis all week. And then people will turn probably as they realise that the details and the meat is really not there, will become slightly negative, and we'll see the markets go back to this range trading, slightly trending down that we've seen, which has been a pretty standard pattern after every announcement over the last year from the Europeans. Was
an opportunity lost here, do you think, Europe? I mean, all the talk up to this summit was the fact that they are on the cliff's edge. This is it. This is going to be the summit where we get some sort of coordinated, detailed plan. It doesn't seem to be the case. Certainly, it doesn't address the short-term issues.
I think it definitely doesn't address the short-term issues. The issues were discussed at the summit were long-term issues. I mean, a fiscal union is not something that's going to happen overnight. What everyone was hoping for, that if they got the long-term issues correct, that the ECB may come in and magically solve all the situation. And the ECB in the middle of the week came out and said, that wasn't going to happen. So an opportunity lost. I don't know if it's an opportunity, because in the long term it could be good for Europe, but for the current situation now, where there are two problems. One is the bank liquidity issues, and that the banks are no longer functioning very well in Europe. That won't be solved by what happened in the summit. And we saw the ECB add another 3-year funding facility for banks. But there are a lot of issues, and there's a lot of press that people expect Commerzbank to start asking for government help shortly in Germany, which is it's like the second largest bank in Germany. So it's quite a major impact for the German economy. And then also the initial government bond yields. Even though we saw the government bond yields get sold down and come back down on the back of the announcement, they're still higher than they were. I mean, they're lower than they were a month ago, but they're still higher than they were for most of the year.
Where does that leave the investor here? I mean, trying to make sense of, what is transpiring and unfolding in Europe. What does it mean for our market? Is it going to be a case of, look, people aren't entirely sure, so they're just going to continue to stay on the sidelines?
I think people haven't been entirely sure for the last 2 months, and people started standing on the sidelines a month. And we've already seen, not just in equity markets, but in FX markets and bond markets and all the markets, that the liquidity has dropped down quite a lot, and everyone's just stepped back on the sidelines. So even in the FX markets, we've seen huge falls in volumes going on there. And what this does, it makes the markets very volatile. And it's hard to work out what, the news that is coming out, whether it's been incorporated into the markets correctly, because the markets can be moved around quite a lot by just one or two big trades, because everyone has moved off to the sidelines.
Do you take any heart out of what's happening in China? Obviously, when we got that central bank coordination in terms of trying to promote US dollars in the European sort of financial system, we also got China lower those reserve requirement ratios. Suggestions, because of the data that we got out over the weekend, suggesting a continued slowing, but better than expected, that we could see more monetary easing, and that's going to be important for our market, isn't it?
Yeah, and I think China is definitely having a soft landing, but for the last year they've been focused on controlling inflation. So they've been very tight both on fiscal policy and on monetary policy to control inflation. And over the week we saw the inflation figures come down quite substantially, and especially in the producer price. So what the actual producers are paying came down well below expectation. And this gives China a lot of room both to do monetary stimulus, so actually loosen up their monetary policy, and we've already seen that happen a little bit. And then the numbers which came out over the weekend about it, not only that the exports had slowed down, but also the imports had slowed down, which means that the domestic economy in China is slowing its growth rate down. I mean, when we say slow down, we've got to be careful. It's not stop growing, it's just its growth rate is slowing down.
Because we're still looking at phenomenal
gives a lot of room for the government to do things. Yeah.
I mean, it's coming down from where at one point it was around 10–11%. I mean, it's coming down to what I think they're after about 8 or so percent.
And when I've looked at look at all the major investment banks who make their forecasts of what growth will be in China, they're all still around the 8–8.5%. I think the lowest growth rate I've seen is 7.8%. And so these are quite, substantial growth rates, and we do get a little bit confused because we always talk about China slowing down. And what we're talking about is China slowing down from a 10 or 11% growth rate to an 8% growth rate.
What about growth rates coming out of Europe? Obviously, it is one of the major trading partners of China, so we're just sort of interested because of that. Your thoughts? I mean, are we going to see some sort of growth, or there are some suggestions we're going to start seeing some negative quarters of growth and out of Europe?
I think we are definitely going to start to see a recession in Europe. One of the big competitive factors that Europe have had, especially Italy and Germany, was their cheap funding, and that's slowly getting eaten away, especially in Italy. And we tend to forget that Italy does quite a lot of heavy manufacturing, especially northern Italy, and they relied on these cheap funding rates to keep them competitive. And that competitive edge is getting eroded away. And so we will start to see, we're seeing signs in Germany of significant slowdown. They're going to have, after the last EBA, so the European Banking Association stress test in Europe, it's clearer that the German banking system is actually in a bigger mess than people actually thought, and that's why they're beginning to talk about Commerzbank looking for government help. That's going to affect the ability of small businesses to get loans. So we're beginning to see this affect the economies and have a real effect on business activity in Europe.
Okay, let's quickly take a look at some other news dominating international headlines and landmark